Welcome, everybody, back to the Atlanta Startup Podcast. I'm Lisa Calhoun, founding managing partner at Valor Ventures and your host today. I'm really excited to interview an Atlanta entrepreneur, Daniel Dorfman. Daniel, thank you so much for coming today.
Yeah, thanks for having me. I am excited. I got to check out a few episodes and really start to see kind of what I was up for. I'm excited to be on.
Yeah,
Thanks
glad
for
you're
having me.
here. So we met at a private equity conference earlier this summer, and I got the chance to see you and your father receiving an award for a really cool business roots. And I wonder if you could just introduce yourself and the business a little bit, let people know what you're doing.
Yeah, absolutely. My name's Daniel Dorfman. I am a lifetime Atlantan, which is pretty rare. And we built the Roots investment community. And what Roots is it is a real estate fund that prioritizes the ability for everybody to participate, including our renters. So we are the first real estate fund that builds wealth for both renter and investor at the same time.
How did you come up with that concept?
So the long and short of it is data. We I've spent my entire career in real estate investing. I've done a ton of deals. I've syndicated. I've helped a lot of wealthy people get wealthier. So when we first kind of had a moment to think about, what the next evolution of what we were doing was, one of the first things I really wanted was to say, hey, you know, there's not really a product out there that's democratizing the asset, and still providing private level returns, right? Because by the time you democratize it and you go through all the steps,
space, is there any margin there?
exactly. So you end up in this world where it's hard, right? And it's hard for operators, and you have to be very intentional about it. And the way that we were able to do it and still provide what we believe to be wonderful returns, since we started 3 years ago, is we looked at it and said, all right, if we are going to spend the money to become SEC compliant and to be able to offer this to non-accredited and accredited folks, we really need to do the best that we can at operating the real estate.
So you became an owner manager.
Yep, exactly. So we needed
to. New, or had you been in owner management?
I had been in that before. So I've done over 54 syndicates into small multifamily in Atlanta.
In Atlanta?
Yeah.
Not the Southeast, not Florida.
In Atlanta.
Okay, awesome.
We are very much targeted into the Atlanta area. And, that's just what we did. And, again, when you're looking at it and you don't have like the fees and the regulatory stuff that you have to like jump through, it's a little easier to produce, 14+% returns because you don't have that extra layer.
Mm-hmm.
So
and you're not traveling and you don't have offsite property management because you're in this network.
Exactly. Yeah. So we really, again, just said, all right, we know we want to do this. We know we want to provide an avenue for anybody to invest in real estate. And we do that for as little as $100. Now, how are we going to do it and still create the return that we want to be able to deliver? And one of the coolest things that we figured out was we looked at all the data from all our previous deals, and this isn't rocket science, but it's, the location of deals really matters. Absolutely.
Okay, give us some tips. What are the hot areas of Atlanta?
Yeah, I mean, basically, we like to hunt on the edge of awesome, is what we say. So
it's not awesome yet.
Yeah,
but with a little
little juicing, we can get it to awesome. And
you to like build fresh, or do you make something beautiful out of something older?
We try to recondition homes as much as we can. One, we like workforce housing, and we like impacting that renter and resident of Atlanta. And anybody who's telling you right now that they're going to build and construct new with affordability in mind is probably not looking at all the numbers.
Maybe not as experienced.
Yeah. So, for us, it's more about, hey, let's go buy a home that's in, really bad shape, probably hasn't been lived in for a little while. Let's recondition that home. And then let's put it back to the market, at reasonable rents. So 92% of our portfolio falls below the affordable housing criteria, which is really nice for us. It's important to continue to have that inventory for, our city.
And what percent is multifamily, just roughly, versus single family?
So we have 136 buildings, and 90% of them are single family.
Okay.
Yeah.
Yeah, this is a really interesting strategy.
Mhm.
Okay, so you 3 years ago were like, all right, we're going to run the numbers. We're going to find a way to help the everyday person make a 14+% return.
Yep.
While living affordably. What happened? Did it work right away?
No, of course not. No, I mean, so basically the fundamentals were, we looked at all the deals that we had, and we looked at it and said, all right, it's really the people in the building that generate profits for any investor. And there's this really weird relationship that happens between customer and owner in the real estate world, which is, it's adversarial, right? Like there's not really another industry that I know of
Where your
where
customer can be a little adversarial.
from the day they walk in, right?
Yeah.
Maybe a rental car.
For sure, from my feeling, whenever I'm standing up to hers. But anyway, yeah.
But it's usually you walk in and that customer is supposed
Your
to be treated
partner,
like they're right.
right,
And
yeah.
real estate just doesn't necessarily happen that way, right? Like what generally happens is they're handing you, like, the tenant, we hate that word, is coming in, they're leasing your building, they hand you the security deposit that they never think you're going to give them back. And the landlord takes that deposit, that check, and says, no, well, this is never going to cover what this person's going to do in damages. And at the end of the day, they both end up right. Right. So the tenant ends up saying, I'm playing kind of house money. They're never going to give it back, and doesn't keep up with the home maybe as well as they probably would. And landlords just don't treat their residents right because they think they're going to have a big bill on the other side. And so what we did was we said, what would happen if we, instead of having a tenant, we had a partner? And we moved people in with the expectation that we're not hiding away from the fact that you're helping us make money and they're helping us take care of this home and this asset. And for doing so, we're going to reward you with a wealth building program that not only allows you to take what would have been your security deposit and invest it in our fund from day one, so making you an owner in that little property in our entire portfolio from the jump, but we're also going to say, hey, if you pay rent on time for 90 days in a row, if you have no lease violations for that time period, and if you do a quick, and this is big for an asset, and this is what makes us very efficient, is we have them do a video of the inside and outside of the property for preventative maintenance. And they identify little things for us all the time.
Wow.
That we really would never have been able to see before. And we probably wouldn't have been alerted to, right?
Wow.
And when that happens,
that is very different. And they're also seeing their own home condition. I mean, this is where they're living.
Yeah, so they're stacking it up and they're understanding the value of reporting those things, which they were never even asked to really do or told about before. And when that happens, what we do is we drop $150 extra into that investment account for them. So just
which in a way is paying for their labor of helping you keep eyes on the space.
Exactly. So, you pay rent on time for us for a year, you do 4 videos, and you don't have lease violations, which is, pretty uncommon. You're going to have $600 extra in that investment account. So you take your $1,500 to $2,100 with no growth. And, it's really magical to watch now. We can go back to why it was hard. It was challenging in the beginning, but it's amazing to watch now where our residents are logging into their investment portals and seeing their investment. And I don't know if you know this, but the average Atlantan renter in the workforce housing communities has about $500 in savings, and that's it. So
wow,
to kind of help multiply that on a grand scale, almost, the $600 covers that every year. We feel like we're making a great, impact on that live, and they're making a huge impact for us because they're helping us to stay, more occupied. Our
So,
units
yeah,
are.
so I'm like wondering now, 3 years down the road, how is occupancy relative to the market?
It's crazy. We are 3 years down the road, and our occupancy's never dropped under 96%.
Wow.
Industry average is, I think, right around like 92.
Mhm.
The number that is
Insurance is so
incredible.
costly.
Oh,
To
that's
refresh the whole home.
it's
And
insane,
and
right?
then it's sitting empty and
Yep.
you're keeping the power on and the plumbing and everything.
It's, the biggest number that we hang our hat on thus far is our renewal rate. So industry average renewal rate is around 52%.
Mm,
Ours is 81.
congratulations.
Yeah.
That's
So
really exciting.
it's really exciting. We've been fortunate to have like great investors, and now our community is, growing by the day. So we have Atlanta buildings,
Right.
but we have investors from across the country.
Wow. How do you find your investors? How do they hear about Roots?
Lots of marketing, lots of different partnerships. We actually just did one with a newsletter called The Skim today.
Cool. Everyone knows the skim.
Yeah, everybody knows it, right?
Yeah, absolutely.
So that was awesome. And we just kind of keep picking our pockets and trying to spread the word as much as possible.
Well, I'm really excited that our listeners get a chance to hear about this. How would they find you online if they wanted to learn more?
So investwithroots.com is where you can find us. You can find all of our information about the fund. You can sign up to invest with us if you want to. You can also reach out to me at any point at Daniel at investwithroots.com. Love to chat.
Awesome. Well, I'm glad you shared that information. I want to go back to a couple things. Like, we were talking about your types of investors, and I want to get to that, hold that thought in just a moment, because while we're on the business fundamentals, I'm curious about what you see, if anything, holding you back from just growing this out tremendously. Like, what are the governors, are the challenges or headwinds on a business like this, if any?
Yeah, so it's a great question. One of the restrictions that we have is, on the operating side is fund limits, right? Limitations to how much I can take in investment.
Yep.
Also property, right? So it's a very tight market right now. Interest rates are extremely high.
I was going to ask, mortgage interest rates are kind of a governor
right
when it comes to that, right?
Yeah, from the fund side, yes. So what we started to kind of really think about was, all right, we've run this program for ourselves for 2 years. Last year, this time is about when we started thinking about it, and we've done decently.
Yeah.
But the operational efficiencies of letting your renter build wealth, which is really cool, were so dramatic that we started to think about that exact question of like, as a fund, an operator, I'm pretty limited. Like that's where that ceiling and those governors come into play. But as a technology, we're not. So what we've done is now we have broken off the like resident experience product and put it its own, basically its own company. And now we can offer any operator across the country this opportunity to build wealth with their residents and experience hopefully the same efficiencies that we have. And, we kind of built a product for ourselves and now get to offer it to the whole country.
That's exciting.
Yeah.
So do you use any type of AI or automation when it comes to looking at the properties?
We do. So we use a lot of AI in the watching of the videos. So understanding what's happening. We do a really unique component where we have a baseline video done at a completely empty level set apartment so that we know exactly what we're looking for.
And so you do that yourself?
Yes.
Great. Okay. So you've got baseline and
then the resident moves in, they do one. So that should match up pretty darn close.
Right. Furniture. So
Furniture is, yeah. And then basically every quarter they're doing that same video. And so we're matching and making, adjustments on our end. And
do you walk them through the video?
We do.
You're like, oh, take this, now do that.
Yep, absolutely. Cool. Because to the point of like,
oh yeah, it's obvious.
Residents don't know what they're looking for.
Well, and also if you're trying to match it on AI, you really need a fairly apples to apples comparison.
Right.
Which AI stack, or how are you thinking of that as you conceive the very fast moving, fast developing AI stack?
So honestly, that's a little above my
No
pay
worries.
grade. But
worries.
the like, you know, we obviously use Chat GPT stack, and we use some other like machine learning type elements instead of, you know, it's not all AI.
You know, we have an interesting portfolio company here in Atlanta, Georgia Tech co-founders. Their very first customer is actually the Synergy building, you know, that big, beautiful property right in the center of Tech Square. And their technology helps industrial facilities do something very similar. It's more on the training of operation, the industrial facility, but they use high quality video to make sure that they can track all kinds of things as well as help people be trained. So this whole visual management system, I think you're on to something. It's hot stuff.
It's as you know, right? Infant is what I would call it, right? And like
Dynamic
and the human component of it
is very hard to manage.
Very hard to manage.
Yeah.
So we have to help train that. Like training the human to help us do this is almost as hard as anything else. But at the end of the day, that is like where the gold standard of where we're wanting to go. Everything we do works very well with like how we're trying to do it. And so we feel really good that we have this like learning pool and like this test pocket to work within as we kind of master out that as it grows, right?
Well, and you're, if there's anything confusing, you're close enough to all of your properties that you can clarify that.
Right.
One of the things that makes me curious, and moving more into that, the right investor for you, you're going out on Skim podcast, I'm sure you'll get a lot of interest just in the next couple of weeks. But I bet not every investor is in love with this product. And one of the things I hear a lot when I'm talking to potential investors around Valor funds is, well, we've noticed you invest in a lot of diverse founders. Does that mean I'm going to have concessionary returns? And they may ask that question, but they actually already somehow believe that that is the case, which it is not with our strategy either. We're investing in the best of the best for top quality to see returns. But I'm wondering how you're hearing about that when you talk about sharing wealth. How's it going? How investor reactions are you getting?
I love that question. So our fund has performed really well, in my opinion, right? We've had over 16% returns for 3 years in a row. But even with that number, we do get individuals who just can't see past this idea of like a win-win. They always
you gave up a dime or a nickel somewhere.
It's insane. And you know, like I will kindly invite them to invest with their hearts. And I'm sure there's a lot of places you can put your money. Actually, I know there's a lot of places you can put your money where it does not make an impact. That's not us though. So we are going to take some risks. I mean, we have risks in terms of we work with people. We don't just shy people away who have had, issues with credit and things like that. And sometimes it works fantastically. And sometimes your
renewal rate, I'm sure. I mean,
exactly. It works its way. Right. And part of our process for like resident selection is a little different. Like we're talking about building wealth when you're calling in on a Zillow ad. That is, a lot of people.
Ambitious person. I think that's a really interesting psychographic frame that is really very much to your credit, because everyone needs a roof over their heads. But those who want a roof over their heads and also have an eye towards building wealth in their family or for themselves, that's probably someone who wants to be a pretty good renter, because they want a whole lot more than that.
Exactly. We actually, and our goal is to position them into home ownership, right? To act as like this mezzanine product between renting and owning. And so we actually just transitioned our first people into home ownership about a month ago.
Did you sell them your own properties then?
We didn't on this one. It's in the roadmap, but really it's for us, it's more about like find the place that you really love, because they built up, $3,500 in their account while they lived with us. And that's not enough to go buy a home. It's enough to help them fix the water heater, help them do like that little repair that they need to do.
Yeah.
And they built their credit while they lived with us as well, and learned because of the videos and because of the way that like
Home
everything
maintenance,
works.
the art of home maintenance, which,
Exactly.
my goodness, it took me many years.
I still don't know that.
It's not that I love it. I'm just being into what to look for. Like, this can go wrong.
My wife's gonna laugh when she reads that. Listens to that. She's the one who helps with all the home maintenance.
Good.
At our
It's
place.
good to have partnership.
Yeah, she's awesome.
So one of the things that as you walked in the door here at Valor, we're talking about investors, and you said, hey, we've got, you noticed one of our posters, and it's about the great returns generated by gender diverse teams. And you mentioned that you were interested in more female investors. And I was like, hold that thought. We can talk about it there. Tell me about the relationship between Roots and female investors.
Yeah. So right now it's not great. Like, we want to do better. And it's we've got around 38% female to male right now, out of 7,000 investors.
Mm-hmm.
And so part of the skim and we just maybe thought.
So that's by numbers of investors, right?
Yep.
Does it look the same for capital?
No.
I see.
No. I don't actually know that. That's a great breakdown, but I can.
Yeah, by no means am I asking you to.
Yeah. No, that's pretty
but
cool. I'll actually.
By capital, you think it might be the women are investing bigger checks or smaller checks?
A little smaller.
Okay.
And I don't actually, I need to pencil that out. That's actually a great number.
That's how I look at it at Valor. 50% of our investors are female or female-led strategies. And it actually is about 50% of the capital.
Yes.
But that has evolved over time. Women have typically been less comfortable, even with, there's not that many people in the South that comfortable with venture capital, period. Okay, it's an asset class that many people don't understand.
I learned that lesson at another date.
Another story.
Yeah.
Next podcast. But once you get into it and someone is really finding out that it's a high risk, potential high return, a lot of times, women very much think conservatively about money, and they might want to put a smaller check in. And over time, I like to think that we've learned to tell our story, and our returns have started, to show time that they are just as risk on as the gentleman in our strategy, which is really an exciting thing to be part of.
Yeah, that's awesome. And I think I actually see it the same way. I think it's not that we're not doing a good enough job telling the story. That's the thing, right? And I think the other thing that we overlook, I think in some cases, is we have a lot of family investments, right? And that decision could have been made.
I'm wondering
female-led,
how many of your
it's a family
renewals
right
are actually female-led. I mean, that would also be so curious.
Yeah, there's so many fun data trinkets hidden,
and that will help you share the story,
right?
Because you can see how interesting it could be to a woman who's like, wow, okay, that 92% renewal rate is driven big number percent by the female head of household.
You're actually, this is it. Just talking about it is kind of bringing this up, but so the people who bought the home, Morgan is her name, and she was on every investor call.
I see.
She led a lot of that discussion, so that's actually very interesting. We think about like the participant. She was there, even though both of them obviously were on lease and investors. So
fascinating.
Yeah.
Well, we've dived into a lot. Is there anything else we should know? I should have asked, or that you'd like to share today?
No, I think this is awesome. We're excited, and thanks for having me.
It's a real pleasure to talk to you, Daniel. Thank you for your time. I'm excited to follow the Roots story.
Yeah, thank you.